Welcome to White Paper Podcasts, where our hosts Heather and Andre discuss an infinite variety of published white papers and scientific studies, making them easy to understand through an informative and entertaining format. In today's podcast, Heather and Andre discuss the investment potential of the Tesla Optimus robot. This podcast lasts approximately 12 minutes.
All right. Buckle up, everybody, because today we are diving headfirst into the world of Tesla.
But hold on, not Tesla's the cars.
Oh.
Tesla's the robots.
Oh, okay, I see what you're saying.
Yeah, we've got this super interesting case study.
Okay.
All about their big bet on the Tesla bot.
Okay.
Codename Optimus.
Got it.
And whether it makes financial sense or not.
Makes sense. So, are they going to be rolling in dough?
That's the million-dollar question.
Yeah, really? Right.
Yeah, and we're going beyond just, what you see in the news.
Okay.
We're going to, really dissect their projections, their market analysis, even peek into Tesla's financials to really understand the potential risks and rewards here.
So this is some serious Elon Musk level stuff.
Oh, absolutely. This is big and bold. They want to dominate the robot market.
Really?
Yeah, bring affordable robots to every factory and business out there.
Wow. So, picture this.
Yeah.
You walk into work.
Yep.
And there's, a robot colleague just, hanging out.
Exactly. That's the vision.
Wow.
But this case study, really gets down to brass tacks.
Okay.
Cold, hard numbers.
All right.
So, reportedly, they've already sunk $2 billion into R&D for this thing.
$2 billion.
$2 billion.
That's wild.
Okay, and they're looking at a massive $20 billion initial investment to really get this project off the ground.
Okay, so $20 billion, that's no joke.
No.
What do they see as the potential payoff?
Right.
You know what I mean?
Yeah, are we talking robot butlers? Are we talking...
Yeah, exactly. Are they going to be bringing us snacks?
Maybe someday, right? Okay. But this case study really focuses on the industrial side of things.
Okay.
And that market is huge.
Right.
Projected to reach $101.1 billion by 2032.
Wow.
So Tesla's aiming for 25% of that pie.
Okay.
Within 5 years of launching this Tesla bot.
Okay, so wait, let me get this straight. 25%.
25%.
In 5 years.
That's the goal.
That's a huge chunk, especially with all these other companies who are already in the robotics game.
Right.
What makes them think they can just waltz in and be top dog?
That's the million-dollar question.
Right.
And that's where things get really interesting, right?
Okay.
So the case study highlights all their assumptions.
Okay.
For example, they're assuming 15% annual growth in the robotics market.
Okay.
So if that actually happens, they're in a good spot.
Okay.
Yeah. If that growth slows down even a little bit, that 25% target starts to look a lot less likely.
Way less likely.
Yeah.
Okay, so everything's riding on these assumptions.
Pretty much.
What if they're wrong?
Right.
That's going to make a $20 billion investment pretty scary.
Oh, absolutely. And that's where we get into this idea of sensitivity analysis.
Hold on. Sensitivity analysis.
Yeah.
I'm a little lost, not going to lie.
Okay.
Break that down for me. What does that even mean?
Yeah.
So sensitivity analysis, it's they're running simulations.
Yeah, exactly.
Okay.
So they're saying, okay, what if the market only grows 10% per year instead of 15%?
Right.
Or what if Tesla only captures 15% of the market instead of that ambitious 25%?
Right.
So this case study models those different scenarios and shows how those tweaks, those changes impact their potential profits.
Okay, that makes sense. But we're talking about such massive numbers here.
Yeah.
How do you even begin to make sense of the potential outcomes in a way that doesn't make my head explode?
Well, that's where this thing called net present value comes in.
Net present value.
Yeah, or NPV for short.
NPV, got it.
Yeah, so think of it like this.
Okay.
Would you rather have $100 today?
Today.
Or $110 a year from now?
Ooh, that's a tough one. I'd probably take $100 now.
Right.
Cash in hand.
Exactly. But what if you knew that by investing that $100, you could double your money in a year?
Oh, okay.
So suddenly waiting for $200 seems like a smarter move.
Way better.
Right. So NPV, it's kind of like that.
Okay.
It helps us compare the value of money today versus potential earnings in the future.
Okay.
And it takes into account all those complicated things like inflation and investment returns.
Got it. Yeah. So it's about figuring out if it's worth the wait, basically.
Exactly. Is the potential long-term payoff worth that initial investment.
Right. Okay. So like what's the NPV looking like for this whole Tesla robot thing?
All right. So here's where it gets really interesting.
Okay.
The case study shows that if Tesla hits that ambitious target, 25% market share, the NTV is positive.
Okay.
Meaning those potential future profits outweigh that initial investment.
They're making money.
They're in the green, right?
Right.
Oh, there's a but.
There's always a but. If they only capture 15% of the market, that NPV, it turns negative.
Negative.
Yeah.
So like they're losing money.
Potentially.
Yeah. Oh.
It would mean that those projected returns just wouldn't be enough to justify that massive $20 billion outlay.
Wow.
And that's just one example.
Right.
The case study really digs into like all these different scenarios. They adjust different factors like manufacturing costs, robot adoption rates, like how quickly are people actually going to buy these things?
Right.
So they're really trying to cover all their bases.
Okay, so sensitivity analysis, it's like showing us a range of possible outcomes.
Exactly.
Okay.
Good and bad.
Okay, and NPV helps us understand if those outcomes would be like a win or a loss for Tesla?
Cool.
But like at the end of the day, we're still relying on a lot of assumptions here.
We are?
Right? Like how solid are those assumptions? Like what are some of the other factors that could like make or break this whole robot venture?
You're asking all the right questions.
Okay.
Because remember, Tesla's not just battling numbers on a spreadsheet here.
Right.
They're dealing with like this constantly evolving technological landscape.
Yeah.
Fierce competition.
Oh, yeah.
And even just like the unpredictable whims of the market.
Right. It's like they're on a roller coaster. They have no idea what's going to happen.
Exactly.
Okay.
So it's not just about if they can build the robots.
Right.
It's if the world will buy them.
Exactly. And I'm guessing that's where we like dive even deeper.
We're going deeper into the strategic thinking behind all of this.
Precisely because this goes way beyond just crunching numbers.
Okay.
Tesla's playing a long game here.
Okay.
And to understand their strategy, we need to look beyond the balance sheet.
All right, let's do it. Okay, so we've talked in numbers.
Right.
We've talked about the risks.
Yeah.
But this is Tesla.
Exactly.
They're not just about the bottom line. They're about like, you know, changing the world, big picture stuff.
Yeah, what's the master plan here?
Exactly.
Right.
What are they hoping to achieve beyond just making a profit?
Well, you hit the nail on the head.
Okay.
The case study like hints at some really fascinating strategic reasons behind this whole robot ambition.
Right.
For example.
Yeah.
Imagine the software that's going to be powering these robots. It's not that crazy to think that that same software could make their existing software even better.
Right. Yeah. Like their self-driving stuff.
Exactly. Potentially boosting sales in other areas.
So it's not just about selling the robots themselves.
No.
It's about like the stuff they create along the way.
It's the whole ecosystem.
Okay. Interesting.
Yeah.
Okay. So what else?
And then think about Tesla's own manufacturing.
Oh, okay.
They are known for their factories. That's super innovative.
Yeah.
Imagine these robots, like, working side by side with humans.
Oh, wow.
Streamlining production. Maybe even reducing costs for Tesla.
Oh, that's interesting.
Right.
They could be their own first customer.
Exactly.
That's a good point. So becoming more efficient.
Yeah.
Boosting their brand image as like the tech leader.
Totally.
It's like win-win.
Seems pretty good, right?
Yeah. But let's be real.
Okay.
There's got to be some downsides too, right?
Oh, absolutely.
Okay.
And the case study doesn't shy away from those.
Okay, good.
One of the biggest concerns is whether Tesla is spreading itself too thin.
Oh, okay.
Will all this money and attention on robotics distract them from their main thing?
Okay.
Electric vehicles.
Yeah, that's a good point.
Especially in such a competitive market.
Right, because if they take their eye off the ball,
exactly,
someone else is going to swoop in.
Yeah.
All right, so it's like that classic dilemma.
It is. The classic dilemma.
Do you stick with what you're good at?
Right.
Or do you try to do it all?
Yep.
Risky. Okay. What else does the case study say?
Well, another big one is that new technologies are unpredictable.
Oh, yeah.
What if the Tesla bot runs into, like, unexpected technical difficulties?
Right, like what if it just doesn't work?
Exactly. Yeah. Or what if, like, people just aren't ready for robots like this?
Right.
Like, what if the market's not there?
Right, good point.
They could be investing all this money in a product that nobody wants.
That's a good point. Okay, so it's a gamble.
It is a little bit of a gamble for sure.
Okay.
Yeah.
So on the one hand, Tesla could, like, totally revolutionize things.
Yeah.
They could change the game.
Yeah.
Like boost their own operations, become like even more of a tech giant.
Totally dominant.
But on the other hand, this could be a huge mistake.
Right? It could backfire.
It could cost them everything.
Yeah, and they could really stumble in their core business.
Okay, so after weighing all of this, what's the verdict?
Yeah, what does the case study say?
Should Tesla go all in on robots?
So there's no easy answer.
Come on.
I know.
Hoop it to me straight.
The case study really highlights how risky, but also how potentially rewarding this is.
Okay.
Ultimately, it comes down to how much you believe in Tesla.
Okay.
Can they actually pull this off?
Right.
And how much risk are you willing to take for that potential reward?
Okay, so no easy answers.
No easy answers.
Just a lot to think about.
A lot to think about.
So there you have it, everybody.
There it is.
Not a simple yes or no,
Right.
but a really in-depth look at a super complex issue.
Fascinating stuff.
We've walked through the numbers.
Yep.
The good, the bad, the ugly.
All of it.
But this isn't just about one company's bottom line, right?
No, this is bigger.
This is about the future of work.
Exactly.
The future of automation robots, like everywhere.
It's a brave new world out there.
It really is. And this case study is just one piece
Yeah, just a small piece.
of a much bigger puzzle.
Exactly.
And as we stand here
Yeah.
on the edge of like this new era of robotics,
Right.
it's more important than ever to ask ourselves,
Yeah, what do we want?
like, how is this technology going to change things?
Exactly.
And what role do we want robots to play in our lives?
What does the future hold?
Big questions.
Big questions.
A big thank you to our expert for like breaking down this fascinating case study.
Happy to be here.
And to you, our listeners, thank you for joining us for this deep dive.
Until next time,
We hope this has given you plenty to think about.
keep those brains buzzing.
Until next time, keep exploring, keep questioning, and keep diving deep into the topics that matter.
See you out there.